Hi there, this is FS Gojo Mentor, and I want to congratulate you to actually making it to the first part of our last lesson. So, in this lesson, we're going to cover the FS Gold New Market Strategy, and we call it the key to financial freedom. Reason being is when properly applied, it will enable you to become a self-sufficient trader. So, without wasting any further time, let's jump in. So, the final step to understanding the new market strategy is that it's a 3 months project. We have worked on a high quality online course accessible from anywhere in the world, right? It's a fully structured online trading academy created to prepare you mentally and knowledgeably to become a skilled professional trader like us. So the previous lessons on trends, support and resistance, candlesticks, and overall technical analysis, all four have prepared you to now be able to understand our new market strategy. So if there's some topics you haven't fully grasped, you'll be able to recap and also learn on your own pace from your own comfortable space. So the new market strategy package comes with 2 PDFs of the new market strategy. They'll be found under the test with the user guide on how to access them, right? They are basically a recap on the final lesson of the new market strategy. And after you have gone through all 6 lessons, you can go and check them out. So we understand that we've taught you how to draw your support and resistance. So we're going to first start with a small recap of how to draw our support and resistance. As you can see, we have a support at the bottom, we have a resistance at the top, and the market will be consolidating like so. So now that you're here, you don't understand whether the market will actually break through or the market will reverse. So we've worked out a couple of ways to help you be able to spot the reversals and breakthrough. So we're going to first start with how to spot the reversal as support and resistance. So let's start. So you're going to need to see a power move into the market structure. You need to see a strong price rejection. The larger the candlestick, the better. So let me show you what I mean in the normal market. So we have this nice pair here under our support and resistance. So I'm going to help you know how to spot the reversals following our simple rules. So firstly, we can see that we're the push to the upside and we're experiencing some selling pressure here, making this a potential resistance. So the market came back down to test our support, short back up, giving us what we call a rejection, and short back up once again. So for us to be able to spot this reversal here, we basically followed our simple rules. So firstly, you can see where the power moved towards our market structure. We can see that we had a big wick creation, and lastly we have what we call a price rejection. So a price rejection is normally a wick that is like this, like a shooting star. So we're seeing that the sellers are now in control and are going to push the market down, hence it's going to be a reversal, and that's how we spot it. So let's go over some few examples to help you know to spot this reversal. So now we have this pair here again, XAUUSD, which stands for gold. What happened was the market pushed up, giving us this push to the upside and experiencing some selling pressure, making this a potential resistance. So the market came back down to test our support structure and shot back up again, creating that power move towards our key level structure. We can see where the big wick creation, and we can see some price rejection, hence we went for what we call a sell. So let's go over one more time and see another pair. As you can see here, we have this nice pair Euro USD, and what happened was the market pushed down towards our support structure, and we see it by a power move towards this level, and we can see a strong wick creation and also a price rejection. Hence the market pushed back up. Similarly, it pushed back up again with a strong power move, giving us a big wick creation and also a price rejection, and the market pushed downwards after that. So that's how you spot our reversal setups. So now let's go over to our next lesson. So now we're going to cover how to spot a breakout. So we're going to first need to go and recap on our support and resistance structures to know how to spot this nice breakout. So usually we're going to have a consolidation under our support and resistance, and when the market goes up, create some sort of consolidation, we are seeing this as what we call preparation for a breakout. The reason we're saying this, we are seeing that we have created what we call higher lows. So these higher lows act as a pressure from buyers to actually push the market, giving it enough strength to actually break through our market structure. Hence we're seeing this as a breakout and not a reversal. So let me show you how we can spot it in an actual market. So what we're going to need first, we're going to need to see higher lows into resistance, we're going to need to see lower highs into support. It needs to be a build up, creating that buying pressure or selling pressure to actually break through our market structure. So now let's see it in an actual market. So we have this nice pair here, GBP USD, and what happened was we can see that we had what we call some nice lower highs. So these nice lower highs were acting as selling pressure. So we're seeing that the sellers are now in control and are pushing towards this support structure, gaining enough momentum to actually break this level here. And that's simply how we spot a breakthrough. So now let's go over a few more examples. As you can see here, we have used the CAD. So what happened here? When we spot a breakout, we need to see what we call a build-up. So this is what we call a nice higher lows. So we see we have here higher lows and they're building up enough momentum to actually break through this support structure, which is opposite to reversals, because for reversal we need to see a power move towards a mega structure, and that's how we get those price ejections, which is a reversal, and you've learned how to spot that now. So let's go over to a few more examples. So we have this nice pair here, EURUSD, and you can see it has been creating lower highs. So these highs were acting as selling pressure towards our support structure, giving it enough momentum to actually break through. So let's go over our last example. As you can see, we have what we call here a nice build up. We're gaining what we call selling pressure to actually get all the strength to push down over our support structure and making it an actual sell. So for us to have a reversal, we need to see a power move towards our support structure followed by a reversal. We have a power move making it a price rejection, and that's how we spot a reversal, and this is how we spot a breakthrough. So let's now recap on how to spot a reversal and breakout. So we're going to need to see a power move into the market structure. You need to see a strong price rejection. The larger the candlestick, the better. For a breakout, we need to see high lows into resistance. We need to see low highs into support. And we need to see a build up acting as consolidation. So that's creating buying pressure or selling pressure to give it enough momentum to actually break through our market structures. So that's what we use to identify a breakout or reversal. So core of price action trading is support and resistance. So support and resistance levels is the most important concept in trading you will ever need to learn to master as a professional or a full-time trader. So drawing these levels perfectly and neatly with minimum error is very crucial for trading success. The ability to draw in these levels professionally is a difference between a successful and an unsuccessful trader. So it's important for you guys to draw these levels perfectly, otherwise you will not be able to trade successfully. So winning and losing traders both draw these levels, but the thing that separates winners from losers is that the right selection and the drawing of support and resistance levels for trading. Hence, it's important for you guys to know how to properly draw your support and resistance. So now we're going to cover the new market strategy, exposing the new market, right? This book is written for intermediate and advanced traders. So if you're an absolute beginner, we recommend you go over our beginner lessons first to take full advantage of this book. So market makers, we're going to cover market makers in detail in the next lesson. For now, what you can know is that market makers are people who actually move the market. Not only that, they have access to all the patterns and information that is shared to 95% of traders worldwide. Now they have learned how to use this information against you, as brokers have sent all the information about how 95% of traders actually trade. So what we want to do is we want to eliminate you from those 95% of traders and be part of the 5% that actually wins. Now, as you can see, our main focus on this new market strategy will be support and resistance, because knowing how to properly use your tools will enable you to spot traps that are set by the market maker. As you can see, it's important for you to know how to properly identify these levels, as it can help you identify your low and the high of the day. So we're going to analyze using an hour, 4 hour to daily charts. So you're going to analyze with the 15 minutes chart for your fundamentals trading, and that is of course news trading. So now we're going to go over a few examples and see how we can spot these nice traps. So firstly, we're going to start with this nice pair here, USD CAD. So if you look closely here, what 95% of traders would do, they are seeing this as a nice cross of what we call our trend from this bullish trend and would go with a sell. However, what we discussed that it's important for you to properly draw your trend lines, because you want to cater for most touches. As if you look closely, we can see this as simply just a bounce on our trend line, right? So what we are doing, we're catering for this touch here and this touch as well. Hence, we're seeing this is simply just a bounce on a trend. So it's also important to know how to draw your support structure, as we're also seeing this as our bounce of our support. So our support structure is basically at 1.3379. So we want to go with the buy here, and 95% of traders went with the sell. And let's see how the market now responds. As you can see, the market responded by actually making a fake out. So it's important for you to know how to use your tools as they can help you identify such traps. So now let's continue. So now looking at this pair here, what most traders did, they're seeing this as what we call a breakout and would want to go for a sell here. So what we see here, we're seeing our reversal setup. That is basically a power move towards our market structure. We're seeing a big wick creation, and now we're seeing a nice price rejection simply by just retesting this nice support structure here. Reason being is knowing how to properly use your tools will enable you to see such traps, as it's also important to know how to actually properly put your support structures to identify such traps. So now let's see how the market responded, because 75% went with a sell and we went with a buy. So as you can see, we are seeing a nice retest. Like again, it's a price rejection. And to note again, for you to hold a pair like this for swinging, it's important for you to draw your trend line correctly, as it can help you know how to actually hold your trades. So if you draw a trend line, I'm going to put my line here for it to be more accurately. So it's important for you to know that you can actually lose 1 and gain a potential 6 by following our simple rules. So the market tends to follow the trend 4 out of 5 times. So knowing to properly draw your trend lines, it's important for you to spot traps and know how to swing your trades. So now we can continue, right? So if you look at this pair here again, what most traders saw, they saw what we call a nice head and shoulder. We are saying this is incorrect. We are seeing it as just simply a retest on our resistance, because for it to be a nice head and shoulder, it should be a breakout outside our trend. So let me show you what I mean by that. So let's say now we're in a bearish channel and the market is ranging like so, right? So the market will be inside this bearish trend and being consolidating like it's doing now. So for us to spot a head and shoulder, it should be a bounce outside resistance and giving us a retest. So that's how we're supposed to enter a head and shoulder. It should be outside our trend and giving us a retest entry, and that's how we properly use our head and shoulder. So more traders use their tools incorrectly and want to force their ideas into the market. As you can see, we are seeing this as an inverted head and shoulder. So 95% went with the buy and we went with the sell, and let's see how the market responded. As you can see, the market shot back down once again. It's important to know to properly use your tools, as it's just only a retest on our resistance and not a breakout. So just like that, we are done with this lesson.